Welcome back. This is World Insight with me, Tian Wei. China's gross domestic product, or GDP, grew 8.1% last year, the biggest jump in 10 years. According to the data from the National Bureau of Statistics, the country's GDP in 2021 exceeded 110 trillion yuan. Meanwhile, China's foreign trade volume has surpassed the 6 trillion in the year 2021 for the first time. What's the best scenario for the Chinese economy in the year 2022 and how to avoid the worst? Let's loop in our panel of economists. For more on the Chinese economy, we are joined in Shanghai, Wang Dan, Chief Economist of Hansung Bank China. In Hong Kong, Hong Hao, Managing Director and Head of Research at Bocom International. In Shenzhen, Xiao Geng, Director of the Institute of Policy and Practice with Shenzhen Finance Institute of Chinese University of Hong Kong. Welcome to the program, the three of you. Let me start by asking Ms. Wang, 8.1% growth rate compared to last year. Of course, last year was very different. How would you see the growth rate of the Chinese economy? What does it mean for the year 2022?
Well, the 8.1% of growth is quite consistent with market expectation, although the economic recovery shape is quite abnormal still for China. Before the pandemic, the main driver was consumption, which contributed about 60% of the growth. But last year, the main contributor was still export, which is more than half of the growth. And that means the job for 2022 to stabilize the economy will be quite difficult. We'll need more stimulus either from the fiscal side or from the monetary expansion, and it's going to be a quite challenging year.
At the speech given by Chinese President Xi Jinping for the World Economic Forum Agenda 2022, he especially mentioned about the global supply chain difficulties and challenges. What does that mean for China?
We actually provided strong support to the global supply chain over the last 2 years. However, for geopolitical reasons, there are, and also pandemic reasons, there are a lot of disruptions which affected the global supply chain. But I think for China, the main issue is how we balance the medium and long-term structural reform and the short-term cyclical, decline. So supply chain is one of the issues, not the entire issue.
At this moment, a lot of economies tend to look inward. Of course, it's important, particularly at a time when you can hardly travel. But the global trade is there, and the global mechanism are still there. So how do you see the short term of bowing down your head and look at the road just in front of you, vis-a-vis the ability to look ahead and plan flexibly?
Well, for China, trade is both a strength and a vulnerability. And we have seen an increasing global dependence on China's production. But everybody knows this kind of external boom cannot last forever. The subsidies and consumer supporting programs in the US and Europe are coming to an end. And we have seen the early signs of a monetary contraction, especially in the US, although the fiscal expansion is starting with some infrastructure plans. But how much of that can be spilled over in China? That's a real question. So looking ahead, the real planning has to be some actual reform instead of just relying on macro policies. So this short-term downturn, just like Ms. Xiao has pointed out, would be some temporary shock. But in the long term, it is still the technology, the capital, the labor that are the most important. And these are the pressing issues China has to address now.
What kind of reform are you specifically referring to? If we could prioritize at this challenging time, what would you say are some of the top 3 or top 2?
Well, to start with, there has to be a shift in the growth engine. We can't really rely on external demand or housing sector, and now it's quite clear. So the fundamental driver for the economy has to be shifted back to consumption and services, and that means redistribution of income to do more reform towards the end goal of common prosperity, like the tax regime change, things like that. And then secondly, our attitudes towards digital economy, because as President Xi Jinping has pointed out, digital economy will lay the foundation for China's future growth in the coming 20 years. And now we have gone through this period of adding of the regulation, but after that period, it's another development phase. In this phase, the platform economy still has to expand, and the future gains has to be distributed more evenly between big players and small players.
That's a very important point. I would picked up Mr. Hong. House cleaning, extremely important if we think about upgrading our economy to the next stage. But at the same time, while that upgrading is going on, house cleaning is going on, how to really nail down the potential and cultivate, nurture the potential could be termed as the same importance. How would you see that process is going right now, Mr. Chong?
Yeah, well, I think we're going through the process. I mean, the three big mountains, we have removed two. And I think as we remove the mountain of property, we discovered that, once you remove the leverage in the system, the growth is 4%, right? So that's the real challenge. How do you balance a structural reform versus the need to stabilize economic growth, especially in year 2022, which is a very important year for top management. So it remains to be seen, how best we can approach this restructuring process, and hopefully, we can manage a soft landing, but then at the same time, we manage to contain speculation in the property sector.
One of the things people point to is not just the growth rate, not just the supply chain, but also some of the other areas, such as financial stability, interest rate rise over the past year or so in some of the most developed economies. China, of course, protests against that, so do some of the developing countries, but that trend is likely to continue somewhat. So what's likely to be the strategy, Professor Xiao, from China facing that specific possibility?
Well, I think there are two sides. One is China still need to have supply side reform. In the past, it's mainly negative, trying to correct some of the excessive. But now we need to motivate, basically companies and individuals to work hard and innovate. And the other is to be consistent with the global environment. Everyone is relaxing monetary policy, fiscal policy, and we need to actually catch up a little bit. Otherwise, our currency is going to be appreciated further.
That become a very technical issue. What do you mean by appreciate a little bit?
Well, you see, we need to understand that when other countries have inflation, then if we do not have inflation, our currency will become stronger and stronger. So that's basically mathematics, logic. So our currency already appreciated quite a lot, over the last 2 years, and that basically means we did not have enough, inflation. Our monetary policy and fiscal policy actually are very tight, and this is not conducive to so-called reform and motivate people to make profit, to improve the economy. So I think this is something incompatible with the global environment. Our overall macroeconomic policies needs to be relaxed, but we need to relax with quality. Quality means that in the process of relaxing fiscal and monetary policy, we need to encourage quality growth.
Yeah, well, I think the consensus is looking for 5% GDP growth in 2022. In order to reach that, some leverage, some form of leverage has to be added back to the system. I mean, already, I think towards the end of last year, we've seen a local government trying to issue a local government bond ahead of schedule, and also spending big on infrastructure spending. So that means that, I think, the system is trying to balance or trying to rebalance, between the need for growth and also the need to do a structural reform. So I think 2022 remains to remain as a very interesting year. It is a year where China is trying to redefine its relationship with the foreign countries, in the sense that Chinese exports growth will slow down, and also the Chinese currency's role in the global reserve currency system will starting to change as well.
I think China, to have a stable growth this year, will require a lot more effort from the government. I had a big debate this morning with a few economist friends, and everyone holds a different position. Because for some of us, we believe
right.
housing market, right, and infrastructure have to be the way to go. Those old engines, they have to be in function again. They're easy, they will work for sure. But to me, it just seems that even during the hardest times after COVID, China has never really relaxed the housing market or increased the local government borrowing to support infrastructure spending. And I think when you eliminated all those impossible, whatever remains, right, however improbable must be the truth, then that leaves us with the consumption. So the consumer market is still the fundamental driver in the long term for Chinese economy. Right now, the income has collapsed. So we need to figure out a way to increase income or just directly give cash. So I've been arguing that central bank digital currency is a way to solve this short-term problem, and we should use it in a larger scale.
Mr. Hong, agree?
Well, in a sense, yes, the Chinese reliance on poverty, the dependency on poverty is just so heavily that it has to be reformed. And I think Ms. Wang just now mentioned the digital currency, which can be used as a targeted easing, right? So you can do a consumption coupon, via the digital system, designated the amount of money that you're distributing to the crowd for some form of consumption. And I think over the past 6 years, what was happening in the Chinese economy was that property prices just keep going up, even until this year, when there was property curbs on the sector, yet property price continued to be very strong. But then at the same time, during the same period, Chinese consumption growth has been slowing down quite fast. So towards the end, when you see the retail sales in December, it was substantially below expectation. So I think, I do agree that digital currency can be a very efficient way, to stimulate consumption in the Chinese economy.
It seems that the several tools that we talked about already creating a lot of debates. Well, Ms. Wang, what you said is exactly right. There are very different opinions in any panel of economists these days about Chinese economy. Professor Xiao, I don't want to miss your opportunity to speak as well.
Well, I think the housing market is really the key. What we need to do is to look at it at a local commodity market. So each place are very different. Like Shenzhen, you need to have more supply in residential housing, but much less in office, building. So this is something I think we have very bad lessons. We should not fix the price. Price is not important. What's important is supply and the demand. We will look at the gap, of supply and the demand. So I think now the government already start to realize, housing market is important, and the way to deal with it needs to be more, sophisticated. Yeah.
At the same time, the social cohesion issue is a big one facing every economy. We heard from the government talking and working on the issue of shared prosperity for all. Now, how will that, under that banner, issues be shaped and also having their impact on the overall economic policy and certainly on the Chinese economy? Ms. Wang, may I have your views first?
So social cohesion is a very complicated matter.
Absolutely.
It requires solidarity as a precondition. And in many countries, we see different opinions in their politics and social systems. Obviously, China doesn't have this issue. But the issue we have now is two different kinds of fairness, right? People talking about inequality between different income groups, those people who can only sell their labor and the people who have a lot of capital. And then there's also the fairness over time. Everybody's welfare has been improving over the past 20, 30 years. It's just the rich people are getting richer faster. So now the question is, how do we improve those low-income groups' income and wealth in a more efficient manner? And that would require a lot of a resource redistribution. I don't think there is a consensus yet on how to do that. So the social infrastructure has to be in place to resolve this issue. And I do think the 2 sessions this year and then the 20 years plenum later in the year would be a good way for those discussions.
Yeah, I think the income inequality, has been, one of the more acute issues that many countries are facing, right? So I think the US is facing extreme income disparity as well. I think for China, there are a lot of things that we can do because it's still a very young, developing economy. So, for example, you can restructure your income tax system. So to put capital gain tax on, let's say, stock market trading and also property investment as well, because in the past 40 years, since the reform and open, the labor share in the overall GDP has actually quite low. It's only been about 50%. So labor is not being compensated enough for what they contribute to economic growth. And I think now that we have a pie that is sufficiently large, so there are more creative to divide this pie and share the fruits of prosperity between people.
Before we go, I would love to have every one of you to tell me, what do you see is the best scenario for the Chinese economy? And of course, later we're going to deal with the bottom line, the worst scenario, while at the same time you provide your solution. Let me start with Professor Xiao. The best scenario for the Chinese economy.
Well, the best scenario is that we actually liberalize more, while having this common prosperity and dealing with the monopoly, long-term, medium policy.
A scenario would be a COVID under control. Everybody is free to get out. The services sector fully recover, and then the border opens. All the foreign investors come back.
All right, and Mr. Hong, best scenario.
Yeah, soft landing in the property sector, and also capital being redeployed gradually from property investment to other higher growth, more efficient, higher return investments that the Chinese economy desperately need. And also, consumption can come back, if COVID is under control in 2022.
We have got our dream. That is the best scenario. It's very important that we talk about the worst scenario, which is the bottom line. What do you consider, every one of you?
Wow, I think the worst scenario really, once again, is the property sector. I think that's the biggest elephant in the room. If property sector crash, then I think it will bring down everything with it. It's a systemic risk. So it requires, very tight management, scrutiny, and also clever re-engineering of the system, and also patience.
I'm worried more about the external environment. If there are further conflicts between China and the U.S., and then we turn more inward, trying to focus on our domestic economy too much and less opening. I think opening is still very important, and also liberalization, because we have been tightening in almost every sector, so long. And it's time to really let market to work with full force.
The worst case scenario to me is that China doesn't have COVID under control by the end of this year. So it has to disconnect itself from the rest of the world for even longer. And it has been 3 years by then. So that means the international environment for China would become very hostile. To prevent that from happening, China needs to open its domestic market more drastically in finance, in real economy, in order to reestablish the reputation and connection.
Well said, the three of you. All very sincere one could tell just listening to your conversation. Thank you so much from the three of you, Wang Dan, Hong Hao, and Xiaogang. Thank you so much. And that's all we have for today. If you'd like to know more, search World Insight or check out our YouTube channel. Follow us on Twitter and Facebook. I'm Tian Wei. On behalf of my team, thanks for being with us, and bye for now.